The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Larry's on vacation. My pleasure to be here. And let's get right to the nitty-gritties after John Logan gave a great presentation this morning. Fabulous techniques that he's developed over the years, him and his team. And the TAS market profile just shows you support resistance lines. It gives you the benefit of all the technical analysis and all the experience that he has. So check it out. It's really something interesting. Oh, last night Steve Rhodes gave a fabulous workshop on candlesticks. I mean, there's an expert on candlesticks. We're here to educate. This is our function. This is our purpose here at TFNN. I remember speaking to Tom O'Brien, 13 years ago, something, 2001, or 2002. Yeah, 2002 we met, in 2003, and then I came in towards the end of the year, and I started my newsletter. I think it was March of 2003. And I remember at the time speaking to Tom, and I said, well, if this is educational, I'm in. And he said, absolutely educational. And that's really what we try to do. And in terms of education, let me just quickly say, because I'm liable to forget, let me go right here to TFNN, front page of TFNN, and you'll see I've got a webinar coming up, New Highs to Come, a 90-minute live event with Basil Chapman, August the 16th. You know, I did this over a year ago. So I spoke about what will happen if there are new highs. What happens in the Chapman Wave methodology if I put it together with something that is robust but very complex, like the Elliott wave? Is there a synchronization that gives me that gives a projection for what could happen to the market looking out if I try to put the two together, or if I spend time discussing my Chapman Wave methodology in the monthly chart? Well, over the period of the year, we made that cup formation an all-time high in May of last year, and we finally broke it. I'm waiting for the Dow to go to 18,623 to get to that leg, that requisite leg D. That should happen anytime soon. Now, what's really important about this whole aspect is that it has triggered a monthly buy signal to buy mode, and that implies higher highs. And I will discuss that. I'll be discussing it in terms of what I call the coda. This is not the webinar called the coda. This is a webinar that says we're into the coda period. That is that final phase before a major sell-off. But it can take a while. And my suspicion is that the Dow is going to go a lot higher before we get there. That doesn't mean to say we can't have a 2,000-point decline in the Dow. But the monthly chart says higher highs to come. Other techniques to say how high. But most importantly, the projection is that we should make higher highs. And that's what I'm going to be discussing. Tuesday, the 16th of August, 6 o'clock till 7:30, 90 minutes, because I want to also take some questions, but there's a tremendous amount to discuss. I want to talk about it in terms of the socio, the political, the economic structure, the faddish structure, just everything about it. I want to talk about it in terms of buildings that are going on. So let me get out of this and we go straight to the market. Remember, this is for subscribers only, but you can get a free month of my newsletter. And so far, it's been quite lucrative for people who have it, certainly this last period. And we're looking at and the definition of a coda. A coda stands for the end period. Okay. So we'll be dealing with that. Now, the E-mini is up 525. Nice action after yesterday. But what's really important, I spent some time for my subscribers this morning. If I can just find it here while I'm doing this, I'm going to go click. And as that comes up, I'm going to keep talking about the macros, the micros and the macros. The macros, as I said, if you're looking at this chart of the E-mini, this doesn't look to me like a leg E or F in the Chapman Wave, this looks like a brand new B. And if that MACD continues crossing positive this month, it's going to be a tricky, August can be a tricky time. Remember August, I think it was August the 18th, I might be wrong, of 2000, sorry, 19, time flies, huh? 1987. That was a top. So yeah, you can get tops, and you got the top in 1929 over the Labor Day weekend, August into September. So August can be a tricky month, but right now everything is actually acting quite well. Not great in terms of the daily chart because we've sort of stalled a little bit, but quite good so far in terms of the monthly chart, the weekly chart, and the monthly chart. Okay, let's get into the nitty-gritties here. Within the context of what I look for, let me just make it real simple. For those of you who are not used to the Chapman Wave methodology, we try to identify the most obvious lowest left side low bar, and we merely count each successively higher peak in alphabetical order, uppercase letters going up to letter G, but the fourth highest peak, letter D, is really important, and that's where other things can happen. That's how, just keep it as simple as you can. Now let me move that away. Let me just go back again to Steve's workshop last night. That also was that was a special because it was on candlesticks, and he discussed a number of candlesticks. Let me show you something here in terms of the work that I do with candlesticks. I've learned how to identify, just for my own purpose within the Chapman Wave methodology, what happens when there are little tiny dojis, like a plus sign, and what happens after that. Remember, it's not the candle itself, it is what happens after the candle. My contention is that if there is a peak F, the sixth highest peak, invariably the second candle closes at the low. That is the candle that confirms that you've made a peak. In other words, the high here was 2183.50. It trades in quarter point increments. So 2183.25 should be the next high that makes the peak. And there you are, 2181.50. So it's a point down. And now what happens is that candle should have closed at the bottom and underneath the 9-period exponential moving average, that black line. This is the E-mini futures, the continuous contract, trades at the same price as the futures themselves. And today, so far, there's a nice inside green candle holding the 9-period moving average. This is the candle. The day's young. Anything can happen. But this is the candle that says it should close decisively below, I would say, 2168 to 2165. And then I have no choice but to say, uh-oh, daily has made a peak F. There is no alternate count. But if there in the Chapman Wave is a move 25 cents higher than 2183.50, the high of the 9th, which was 2 days ago, that starts a new leg up. And then I get the parallel wave count called G/B. If the MACD crosses positively, and it's going to be tough to do without moving at least good, I'd say 10 to 15 points to the upside. If that does happen, we could actually be moving even higher. So those are the parameters to look at. I'll be right back. Basil Chapman sitting in for the one and only Larry Pesavento. This is Trade What You See, and I will be right back after these very important messages.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So the jobs report, I guess it was 255K, so it's kind of in line, I suspect. That's why the market is not breaking down. It's also not breaking up. It's holding quite nicely. Macy's up 490 at 38.90. Well, Macy's looked like it was, oh man, look at this stock. This is the all-time high, peak F in the Chapman Wave monthly chart, July of 2015 at 73.61. Pulls back a little bit, pulls back to from 70, what did I say it was, 73. It pulls back to 29.94. I would say that that's definitely, what is that, 55% decline or 60%. Now, it's gone up 483. Must be good news. Maybe it's a buyout. Who knows what it is? But the chart looks just terrible. Wait a minute. How does that impact the RTH, the retail index? Well, the retail index closed at 80.47. Remember, we're looking at the Chapman Wave methodology of looking for a peak D. Well, you made a peak D in the daily chart of the RTH, that's the Market Vectors Retail Index, has Walmart, Home Depot, Amazon, CVS, Macy's, Target, Costco, just the works, okay? And TJX, whoa. And then what happened? Walmart, no, doesn't have Walmart. It has WFM, Whole Foods. Wait, where's Walmart? Oh, well, the very first one was Walmart. Okay. So this is going to be very interesting because here's the pattern that I have no choice but to draw in a pattern that goes like that. And it's what I call the Chapman Wave stalk leg formation. And that suggests there's an oval pattern. Look, this is not a rectangle. This is a definitive oval pattern. And if it breaks out, it can break out. And let me type this in because you saw that in the Dow chart. You can see that right here. I've notated it in the monthly chart. All of a sudden, you've got in the microcosm, this is a leg. All of these constitute one leg, and then it stops there, and then it starts to make this oval pattern. I call that the body. And this, if it breaks above the last high of peak D made on July the 26th at 80.86, and right now it's at 80.47, that starts the neck formation. I'll just put this in. I'll make it gray because it's unofficial. We haven't got there yet, but I'm just saying that's the pattern that we'll be looking for. Great, let's make it less than gray. Okay, so the weekly chart holding at peak D, holding a very nice consolidation at the highs. The XRT, I believe, yep, the XRT is the S&P Spider Retail. That's had a bit more of a pullback, has a slightly different mix. That made a peak E in the weekly, It's kind of consolidating in a sideways pattern, just trying to break out of a downtrend in the weekly, and the monthly has the same kind of pattern. Two different charts, in fact, I would contend. So this is going to be very interesting. What happens? How does it impact the markets? Surely, if Macy's is doing well, that's kind of a good sign, although their CEO has always been a very special person. Funny enough, I didn't even talk about Macy's yesterday. I met with someone I meet with a good few times a year, been friends for years and years and years. And he, if anyone knows retail, he went to school with guys that are head of all these different institutions, these companies, Macy's being one of them. Usually we talk about, I just forgot to talk about Macy's. We're talking about many other things. Oh, Macy's closing 100 stores. They won't be good for mall owners. Dave White in the Den says, yeah, that's for sure. I'm going to be talking about this on my webinar on Tuesday night. The makeup, the change, and what's happening with so many malls being built, especially here in the Northeast, wherever you go, certainly in the Boston area, wherever you drive on that ring, that 128 ring that they now call 95, that goes around from the lower part of the Boston area up to the north side. And it circles, and you're at Waltham, which is really the high-tech area. Malls everywhere, but the interesting thing is that malls that have become very popular are not the enclosed ones, and now the single-store ones, the strip-type mall. But they do different things, and they have jazz bands and all sorts of things. I'm going to be talking about that because this is part of the phase that is one of the most important phases. We are looking at a change in the structure of the United States. In so many ways, fewer young people are buying automobiles, fewer young people are buying houses, fewer young people are investing in the stock market. Will that change? Is that a systemic change, or is this just an ephemeral kind of a fad thing that says, okay, for now, but in another 3 years' time, and they'll all be back again? These are things I'm going to be discussing. Why? Because it's integral to the structure that you would normally call what has been the label when foreigners look at the United States. It's the excitement of entrepreneurship. It's excitement of creativity. Many other countries have as many creative people, but the structure doesn't allow them to. It allows them, like some countries are very good at copying. Other countries are good at innovating, but they have no idea how to sell. And America is the place that's always put the things together. I'm going to be talking about that because I think it's structurally really important to the next phase. I'm talking about the next phase, 7 to 10 years, maybe 15 years. Okay, so let's get back to the nitty-gritty. So we'll see what happens if Macy's can help. Now, I just wanted to show you something here in the E-mini because this is what we want to look at here, market-wise. The E-mini up 525. Look at this is right there. Here's the 120-minute chart. A very unusual, I shouldn't say very unusual because I see it enough, but I mean because I look at hundreds and hundreds and hundreds of charts, but it's unusual in the context. It doesn't happen that often. If you look at enough charts, of course, it feels like you see. And it's the inverse. I've never seen this discussed. I discussed it about 4 or 5 years ago, and I did quite a bit of work on it. And it is the inverse of the cup and handle. It is the handle and cup. What the heck does that mean? It means you make a small little cup formation, and then you either just barely break the top or you don't break the top, but then you make a much larger, on the right, you make a much larger cup formation. And that invariably implies, in the work that I've done, that there will be a rally towards the previous high. But unless there's a pattern that I call the Chapman Wave cup and ladle breakout pattern, which means that before you get to D, not only do you smash through the left side, in this case 2183.50, resistance, it only does that in C, and that invariably says you can still go to a D, you could even go to an E, higher peaks, and then come back and test the lip, in this case the lip of 2183. That makes this a very important day for a number of reasons, and we'll get into that as we move along. Let me just say that we're about to start the trading day in 5 minutes, so I wanted to run through a couple of things that I might not have time for if I do get calls, or if I get distracted, or if I get talking about the mega structure that I love to look at in the market. So let's just do this. W, this is a weak continuous contract making a leg B. Yes, a leg B as we speak. A, It could be a peak B if there's no new high above yesterday's peak. And that's really important because the weekly chart really is showing very little support. And if it breaks again and goes underneath 400, and it's at 422.5 right now, up 3/4 of a point, that's going to be very negative. What you want to see for this to be a very strong breakout to the upside is for the 433? No, I'm sorry, the 436 area needs to be taken out, and it needs to be taken out by Monday or Tuesday in a V-shaped pattern. No messing around sideways. There is no time for that in this particular pattern if it's going to succeed. If you look at corn itself right now is up. This is kind of stuck. So we'll look at some of these commodities when we get back. Basil Chapman sitting in for Larry Pesavento. I'll be right back after these important messages, and the market will be opening in a few minutes. That's going to be important. Be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back, and the Dow's open. It's up 41 points at 18,537. S&P is up 566, up at 2181. Comp index is coming around the corner and it's around the bend, and it's going to be its third place. It's at 18. It's up 18 at 5222. And you've got the VIX index now pulling back. It's down 16 cents at 11.87. Dow's now up 48 points. S&P's up 6.36. Gold is, let's just do this right now. Gold is GC. Gold is trading down. Oops, now it's up $1.08 and 13.53. Stuck in a range just like the dollar. Look, gold is stuck. If gold is able to close above 13.75, now I'm going to make it a little bit more. 13.76 by Tuesday or Wednesday of next week, that's going to be really positive. And that would suggest that the dollar is going to stall and retest its low of 95. Right now, the dollar is down 8 cents, up 8 cents at 95.73, making that H pattern that I talk about where you come down sharply, you make an arch formation, and what happens after that's really important. If you take out key support, in this case, if you take out the support from yesterday of 95.44, close below it, good chance you're going to make an H pattern and retest the low that was made in the 2nd of August at 95. We wanted to look at the TRCCI, that's the commodity index. Commodity index is down a little bit in the H pattern, but it's up on the day. So far up 61 cents at 420.31. This is very important because it is the all-encompassing Thomson Reuters Continuous Commodity Index monthly with Chapman Wave notation. Strong, powerful leg A. I think it's going to make a peak A this month. In other words, I don't think it's going to break to the high that it made a few weeks ago, peak G in the weekly chart of 438.22. I think it's just going to stall right now. Now that means that I need to go to crude oil, and crude oil is up 12 cents, but it's got that H pattern, makes me a little bit worried. Why? Because when it came down and tested last week, the low that was made on the week of the 8th of April at 38.50 was tested successfully last week when it went to 39.19. But until, and what I'd say to people who called into my show, which is the Tiger Technicians Hour at 11 o'clock every day, just 2 hours later, I'd say that this should be a V-shaped recovery. If crude oil is going to really succeed and power to the upside, it needs very much to, it has no time to go sideways. Remember I was talking about that just a moment ago with whatever stock I was looking at. What was I looking at? So it doesn't have time to go sideways. Yeah, I think it was wheat. I said wheat has to move very quickly to the upside. Now what we're looking at is that crude oil is taking too much time. So I just think it's going to stall. It's going to be stuck between the 38s and the 44s for now. Now that's going to be very interesting because it has been the fuel. A lot of the time it's been the fuel for the move to the upside in the market. So now let's look at the parallel here. This is the 5-minute chart. Red is the USO, which is the United States Oil Fund. And green is the SPY, 5 minutes. And the SPY has gone peak A, B. This is gapped up in leg C, and it should go to a D. Doesn't have to, but it should go to a D. 5 minutes is really subject to a larger time frame, maybe the 30-minute. But in this case, it seems to be holding well. And the USO is now at 987. And that is in just the start of a leg A. And as long as it doesn't break down, if it moves up just a little bit, that's fine. It's going to help. So let me just tell you a little bit. I do my service is called the Opening Call, and it's subscribers get every day. They get starting off. Let me just do this. I'll put it up here. Every day it starts off with the Dow analysis. Oops, that wasn't the Dow now. Oh, did I forget to put the 120 in? Don't believe I forgot to do that. Good grief, after spending, I spend so much time on that. I do a lot of work every day. So let me go back to this. This is the daily chart of the Dow. And I explained that it made a Chapman Wave peak C1 and peak C2, but I think that there's enough strength, and we are long. We are actually long from over a week ago, the Dow. And I thought that there would be enough strength to have a move that takes us to that requisite leg D, which means in this case, it first of all has to go above 18,585 in the Dow, and right now we're at 18,563, a little bit to go. And then we'll be able to tackle the 18,622 level. And there's a left side, right side price time match. In this case, let me just do it, move it away for a moment. Let me show you this right here. This is the, God, I can't believe I wrote the whole thing up, and I must check. Yeah, I forgot to put the Dow. I was doing so much work this morning that I forgot to do the analysis of the 120-minute chart, put it into send it. Maybe I'll send a little later for those of you are listening who are subscribers. So what I wanted to show was that the Dow had enough internal strength, and if you take the low that was made at 18,247, that was 1, 2, 3, 4, 5, 6, 7, 8, 9 sessions to the downside. And if you look to the upside, we've got 1, 2, 3, 4, 5, 6, 7. So we've got, if there's an exact match, that should move over here. Sorry, if there's an exact match by Friday or Monday, we should be testing 18,622. That's the left side, right side price time match. All right. So, and the MACD hasn't crossed positive yet. The stochastic's actually now finally at 80%. That's good action. So as I say, we went long last week. I think it was right here, right there on that candle. Was that this? I think it was the second. Or it might have been that. I wanted the Dow to dip a little bit and then go positive. It was a Wednesday a week ago. And we're going to be staying long. In fact, I'm not sure if we were able to add to our position this morning. Let me just, if you don't mind, I'm going to just do something here because I want to talk apples to apples and not make up something. I don't know if we got it. I don't think we got it. Let me just check. Yeah, I don't think we got it. What was the action? Unless you got it pre-market. 77.49 was the low. Oh, let me just see. Excuse me a minute. I just want to see if I'm talking apples to apples here. Get it at 77.25. I think we missed it unless I was so busy I just wasn't able to check to see if it was picked up. Now, let's just do this. In my analysis, in the Chapman Wave analysis, I put together a couple of things that said, in Elliott Wave, the big thing is 5. You're going to go waves 1, 2, 3, 4, and 5 is the acceleration down or up. I contended that this, in my work, coincided with an Elliott Wave 5 to the downside after making 5 to the upside. This is my analysis. It's not exactly purely Elliott Wave at all. In fact, I'm starting to move it away to say that I have another technique within this technique that makes it completely a separate thing. So I'm just using the numbers of 5, 1, 2, 3, 4, 5, as opposed to my ABCDs. And in this case, I said that that peak D that was made, I moved it from there, to that peak D at 18,585 in the Dow 120-minute chart. We had broken out. Remember, I spoke about this on my show yesterday to say that this Chapman Wave falling axis declining cone says that there could be a 1-to-1 to the upside, which should take you to about the 18,006, what is that, 630 area. And that I'm suspecting that they're going to have a move. Did I not? I didn't send it to subscribers. I'll do it a little later on during the break between this Larry show and my show. Just to show that this Chapman Wave inside track target line is the resistance, and how we break above it is going to be very important. But I suspect there's a complex move to the upside that should take us by Friday or Monday to the 18,622 level. Hey, the day is young. I'm sure there are more economic reports coming out. We're stalling right at that resistance line.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber
as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Hi, folks. A couple of things that I look at in this is the overview that goes out. The first chart was the Dow chart that usually goes to my subscribers on my opening call. Then comes the overview on market today. And in this, I discuss, and here I say, the next 100 points up or down could well be directional, a directional kicker. And I showed the 120-minute chart made, the Dow made a peak D, so you got to see it push much higher very quickly. The VIX index did rally some, but not a big deal. And this is the Richard Arms Chin Index. There was no indication there. And here's the bar chart of the Dow, which says you've got to go to leg D. Don't have to, but you should go to a leg D, and that should be above 18,622. And the S&P has made a peak E, and it could, in fact, go to an F. And that could even be an alternate count if certain things happen. What are those certain things? And this is going to be very important. What I did was I showed from subscribers. Did I just take that away? Yes. I discussed this in quite great detail, and it was the daily and the weekly chart of the continuous contract of the Dow futures. And in that, I had shown that there's a one-to-one projection that says it should go to that red dashed line, and that the MACD hasn't yet crossed positive, but it could. And the stochastic needed to get above 80%. But walking this 9-period exponential moving average was very positive, and the one-to-one of this pattern I call the falling axe, which looks like an axe. If you've got the long handle and the axe blade turning down, call it a declining cone. That'll be the more formal way to do it. That'll get into the textbooks rather than a falling axe pattern, especially in this day and age. And there's a one-to-one expansion. Is that going to happen? Well, the day's young, we don't know. But now we get to the weekly chart, and I discuss that dashed line in the weekly chart, let me get out of this and I'll show you the real thing. This weekly chart of the YM, continuous Dow contract, says, look, this has already made a new leg AB, what I call a gray AB in the daily. And that's really quite positive so far. The day's young, but that's the way it is. But it's this trend line resistance. Normally what I would do, I didn't want to make the chart too messy, but normally what I would do is I'd make this green, and you'll see why. Look, that goes green. I make this red, and you'll see why. New parallel, make it red or pink. I don't want to clash. And I do that, and I call it the Chapman Wave inside track. What does that mean? It means that whenever the price of whatever you're following gets into this range, and usually it's at least 2 higher or lower peaks or troughs that we are looking at. And I give it about 3/16 of an inch, maybe 1/4 of an inch, depends on the chart. The chart has to tell me how much, there's no fixed number, but it's a small, narrow channel. When it gets into that range, that's the repellent range. And if it breaks above it decisively, above the green dashed line and closes above it, you've got to consider that something else is going on that's really important. That's number one. Number two is that if it gets repelled, and in this case at 18,537 up 85, if it suddenly declines and closes underneath 18,200 is the 9-period moving average of the weekly chart. This is the weekly, daily, weekly, monthly. If it closes below 18,200, let's be safe, let's call it 18,180. This is the first time since you broke out back in July of this year. It'll be the first time that you're closing, that you, the Dow futures are closing below that line, and that's important. But you can go below it, but closing below it, look, you haven't done that. In fact, you've only closed once below it since you broke out in February of this year in the weekly chart. That's how important the 9-period exponential moving average is. All right? So I just wanted to go through those things to say my contention is that we will go to a D in the Dow. Could be I could be missing this completely, but my analysis based on 7 or 8 different areas of technical veracity are suggesting strongly that there's enough upside energy to complete this move, and then we've got to make some decisions. And that'll start leg E in the weekly chart because there's no other way I can count it. And that's really interesting because I've got different notations. Look, the S&P SPX.X in leg D. And let me just do this one more time just to make absolutely sure that if you're new to my work, that at least I don't want the words to go over your head. I know that from my own experience, I have very limited concentration for when people are talking, because my ideas, I get stimulated by what they're saying. So then all of a sudden they talk about something. I say, I'll be saying, hey, that's a good idea. Maybe I must look at, while I'm busy saying, I must look into that. That's very interesting. I haven't thought of that. They're busy talking and I've missed the conversation. So I don't want to do that. I have to go with pictures, and that's what I'll be doing on Tuesday night in my webinar. I'll be showing pictures because I can't take the talking too long. I have to have the visuals. So here we are, A, B, C, D. D, other things can happen. You saw how many times you had very sharp pullbacks from a peak D, and lo and behold, look, that's the sharpest pullback from peak D that you've had in the S&P since you broke out from the low of the 6th of July. That's how important it is. But having a sideways move after going to an alternate count, that can be positive. So the day is young, but so far, action is pretty good. Now we want to talk about other things. It's a Peaky in the Den asks, Basil, do you find more of the retail crowd becoming more bullish, jumping on the train? I was talking to someone the other day. I played him tennis. I've never played him tennis before. I've kind of met him once or twice just to say hi to, because he's in the same tennis club that I'm at. And I played him on the weekend. Was it Saturday, Sunday? Anyway, I played him. And afterwards, we were just talking. And lo and behold, it turns out he has a fund and he does all sorts of things. He was at Fidelity, in fact, back when I started at Fidelity way back then. I was a consultant, and he worked in a fund, bond fund. Now, it turns out that as we're talking, we start together. We both say, "Isn't it amazing how over the last 2 years?" No one here at the tennis club, that is, ever talks about stocks. At least we don't hear them talking about stocks. So 2 things could be happening. One is like in the year 2000, where the NASDAQ usurped all the usual energy that you would find coming from the Dow, going into the Dow, that is, went into the NASDAQ stocks. So that's why the Dow, I had a projection of the 17,000s, never went even close. But I did get the major sell signal January the 14th, 15th, or whatever it was, because it was a peak D, I believe. And then later on, they got the acceleration that had sell signals in the NASDAQ. And I remember at the time saying that the NASDAQ will never again see the levels that we're looking at. And here it is 16 years later, and we're almost there. So, okay. So the question is, it's a great question, do I find that the retail, that's just the regular folk, are becoming more enthused? Well, I think quietly there are people that are starting to move a little bit more money But whenever anyone I've spoken to who has been at one of the places like maybe let's call it like a UBS or a Fidelity or any of those big institutions, Vanguard, they are saying they've never seen such big cash positions ever in bonds and in cash. I'll be back. Maybe we'll talk about that in this very last section because that's going to give us the first half hour. Is going to give us at least the beginning. Remember, Larry likes to say the first hour is for amateurs. I have a slightly different opinion, but he's kind of right. I'll be back. Basil Chapman, Target Technicians Hour. Dow's up 76. I mean, no, this is Trade What You See, Larry's show. Dow's up 76. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So just let me quickly do this. This is the 2-minute chart of the Dow futures. Went to a peak E and it's pulling back. Went to a peak E and then an F in the S&P futures, and now pulling back because 10 o'clock could be new news, could be any kind of news. Who knows what's going to come up and right now, and we'll see what happens. And I'll just make it real simple. So I just want to show you this chart right here. I hope that this is all done. Yeah, so the S&P cash just went to peak D in the 5-minute chart. So this is a very important moment because if the Dow gives back all the gains and is only up maybe 20 points by 10:30, and the S&P is actually down 1 or up only 1, that's a big change of course. But if in fact there's even a little bit of a pullback, but later in the day, the VIX index continues to fall under 11, it's at 1170, but it goes under 1150, that's going to suggest that there's a bias to the upside. There'll be a stair-step move with quick shoots to the upside and then sideways and then up to the upside, not allowing people to really jump in with confidence, because every time they want to jump in, it pulls back and they say, oh no. That's the kind of move that I would love to see as the VIX index starts to slide. Lionsgate mentioned in the Den Fletch said that insider buying of LGF 50,000 at 21.70, trading at 21.93. Woohoo! 20,000 times 20 cents, nice. But it is a leg C in the daily, and I suspect it will go higher. I think this is the pattern that I call the lowercase m to the lowercase h to the lowercase m, and that says LGF trading at 21.94, up 63 cents, needs to close on a weekly basis in the 24.90 to 25.20 area, so that it could try to touch the 26.20 200 period exponential moving average. It hasn't been even close to since it broke down back in January of this year. The monthly chart is not too great, but this is the backing and filling that you want to see after a big move down. So with that said, there are a couple of things that are going on that AKS, when I look at AKS, AK Steel that is, AKS, trading now at 56 foot AXS. What is that? Axis cap, looks good. No, you wanted AKS. Oh, there's the break. So I'll do that in my show. Oops, it's given back a lot. The steels are just taking a breather after a massive move to the upside. I'll be talking about that Tuesday night in my webinar. Check out my newsletter. Go to the front page of TFNN. Basil, Chapman sitting for Larry President. I'll be back tomorrow for Larry's show as well, and this afternoon with Tom O'Brien. And I'll see you at 11 for my show. Thanks for being here.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.